comments from Vodafone, pretty downbeat there. More pain to come?
I think in some respects, not necessarily. I think the actual sell-off in the market, it may not have been as pronounced as we would expect given those numbers. The main surprise there was Germany, particularly in light of the fact that it's been a bit of a powerhouse and one of the biggest countries that helped support this country. But it has seemed to offset a little bit of that downfall with regards to Southern Europe in the emerging markets. So I still anticipate that the fact that it does offer fairly decent dividend, well above the actual average dividend for the FTSE 100, will support the actual price, but you would expect to see the 200 pence mark act as a barrier of resistance for the main, I suppose, for the medium term anyway.
Now, recently we've had a raft of disappointing numbers from tech companies like AMD, Microsoft, Google, Yahoo. How is this going to affect the European stocks in the weeks ahead?
Well, I think in some respects there was a feeling that the US good earnings would make its way over to Europe. But of course there is a huge recession taking place in many of the peripheral countries. So I do expect to see a little bit of a pullback, but nevertheless it is very much dependent. The equity markets at the moment are not necessarily related to earnings. They are very much related to what the central bank policies are. And as long as we have quite dovish central banks in the form of the Bank of England and of course the ECB, with the prospect of negative interest rates there, I think we'll still push higher in line with the US markets. But the tech sector is certainly a bit of a worry, and it has taken the wind out of the sails, out of the normal corporate earnings, which has dragged it down quite significantly in terms of what has met or beaten expectations, from over 60% to just over 55%.
And indeed, I can see here the FTSE and the CAC have opened lower this morning, along with the DAX as well. There's also the G20, FinMin, central bankers meeting there, wanting to know if US and China are going to derail the economic recovery. OECD report also on tax dodging. What do you expect to hear from the G20?
Well, I think the tax optimisation addressment is going to be the main issue over the next couple of days. And of course, this is down to the fact that some of the big multinationals have been basing themselves in tax havens and have pretty much avoided paying tax for the most part. But I expect that will be addressed to a point, but there will be a certain amount of opposition from the emerging economies versus the developed, and those that are, richer versus the poorer. So I think the main thing that needs to be addressed is changing the laws. There's no point in complaining about tax evasion if the law and if there is a legal loophole in which to do it. And I do feel as well that the tax accountants that actually help the multinational companies to do this also work with the government, so they are well versed in what loopholes there will be. So that is probably one area that should be addressed, but will probably not be.
And just to finish up, UK borrowing numbers also out today. Further improvement or not?
We're expecting a slight improvement. The deficit to be 9.4 billion, I think, today. But certainly it's better than last month. But you can also say that since January it has actually increased. So government spending is definitely an issue, and you would expect to see some sort of statement from George Osborne at some stage in the day.